morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. The country's budget balance swung to a deficit in January. Data from the Bureau of Treasury showed that the budget shortfall stood at 14.1 billion pesos during the first month of 2021. That's as tax collections continue to drop. The January deficit is a reversal from a 23 billion surplus recorded in the same month of last year. Broken down, overall revenues in January 2021 declined by 11.5% to 260.7 billion pesos. Tax revenues fell by more than 8% to 232.7 billion pesos on the continued economic disruptions caused by the pandemic. Meanwhile, government spending inched up by just 1% to nearly 275 billion pesos. Security Bank Chief Economist Robert Dan Rosas said the government should ramp up spending in the coming months to help the economy recover faster. Okay, guys, checking in on equities all around the world. Let's kick off with Wall Street. Overnight, the S&P 500 and the Dow Jones ended at record highs. This comes as the central bank over there raised their economic outlook, at least for the United States, but still reiterated policy support when it comes to the interest rate. So this from Fed Chairman Jerome Powell. He reiterated that the central bank will have a tolerant stance on inflation and on the recent rise in bond yields, even as investors had actually expected a more hawkish tone. So this, according to several strategists, said had reassured investors. SocGen rate strategists had actually called it a risky asset nirvana. Meanwhile, you've also got Guggenheim Global CIO Scott Minerd saying the U.S. recession is over and inflation is about to rise significantly. Now, let's take a quick peek at how Asia is moving this morning. A bit of a offshoot or overspill from Wall Street. You can see the Nikkei 225 up by 1.9% already, together with the Topix up by 1.4%. The other markets moving quite in tandem, with Taiwan up by 0.8% as well. Now let's take a quick peek at how we are opening the first 2 minutes of trade. Bit of a recovery there. We're still at 6,500 levels, inching our way up to 6,600 levels. Not quite there yet, but at least better than yesterday. We are up by 0.3% this morning. Let's take a look at which ones are actually pulling up our boards and keeping us afloat. You can see properties leading the charge here. That's up by 0.6%. Financials and industrials as well, pulling in their weight. But you've got, on the other hand, services and holding firms still continuing to be sold off. Now, of course, just recall that this comes after the Philippines has been named one of the world's worst performer this year. That's down by 8% year to date, compared with a gain of about 5% by a measure of global equities. Now, here to chat with us about specific sectors and the stocks to be watching this Thursday, we have with us Mike Enriquez of Sunlife Financial. Good morning, Mike, and welcome to the broadcast.
Hi, good morning, Danny.
Mike, let's kick off with some specific newsy points here. First of all, airline and tourism. This comes, of course, with the second surge, or if we can call it the second wave already here in the Philippines. And again, halting or at least limiting the number of passengers to 1,500. You've got PAL already saying they might be canceling some international flights. And now airline losses hitting 65 billion pesos in 2020, according to ACAP here. What is the state of affairs here? Is this going to be harder than anticipated for these industries? Are you still in any shape or form optimistic for a recovery here?
Well, just the time that we are about to be optimistic that vaccine rollout will start to happen, but again, surge in infections have started to be highlighted again. So, and the government is very conscious of the fact that they cannot lock the economy further. But I think airlines, given this, would still have a difficult time this year, given the fact that there's still mobility restrictions, and a lot of the consumers continue to be wary of the fact that it won't still be this year that they can travel. I'm sure all of us are raring to go out and travel already, but I think the reality is we would need the vaccine rollout to be faster than what we are expecting currently. And I think that's the only time when we can have more optimism on the airline industry and the tourism in general. We've started to see domestic tourism happen, but I think it's not enough for the airline industry to really recoup their losses last year.
Mike, according to ACAP director, executive director Roberto Lim, so far the aviation sector has only received 800 million pesos versus the 65 billion pesos of losses. They're saying that it's
Mhm.
basically the families that own these airlines that are putting in the money here, and without government support, we really risk completely losing this industry. Now that even Secretary Sonny Dominguez has said fiscal prudence will be remaining, and they
Mhm.
basically are not going to be pushing in for more aid for these sectors. What's going to happen here? I mean, can just as you mentioned, vaccine story, reopening of the economy, flights sustain this even if they don't have this fiscal aid?
I think that's really a good point that you raised here. I think there should be some financial aid coming from the government. I think the owners themselves have a certain limit only in terms of how much they can continue to pour in money. They've already right-sized their companies. I think that's one of the largest layoffs that we've seen in the industry last year. The sad thing is, if this continues, you might see further layoffs or furloughs for this industry. But I think the government has to do something about this um, and partner with the private sector in order to help alleviate the problems of the airline industry. And I think it will be prolonged.
Okay, let's move on to the financial industry. I have a couple of earnings to break from
Mhm.
smaller banks, so to speak. Let's kick off with East West Bank here. Their profit was actually up in 2020 by
Mhm.
4%, and this comes after they doubled the NPL provisions to 9.8 billion pesos last year. But still, their loan book declined. So loan books declining, and double of provisions, and yet better earnings. What's going on here? Are they doing something different from the other banks? Is this something that you expected in any way?
Yeah, it's a bit surprising for East West Bank. They're bucking the trend on even higher provisions was the biggest culprit on banks' earnings last year. But if you look at it, their net interest income in fact increased. So I think that's one thing that was going well for East West Bank to enough to offset the higher provisioning for last year.
Is there something that you are seeing in terms of the banks, because it's just been such a mixed picture on the bank's performance last year? You said that their net margins are okay, and this despite, of course, the easing that the BSP has been doing. Are there the smaller banks benefiting more from the easing than the bigger banks?
Well, I think the bigger banks would have more on the deployment of loans, right? So I think they're more dependent on that. With as far as the smaller banks, specifically East West Bank, I think the bulk of their loan book would be in credit card, which in fact enjoys a higher net interest margins. Trading gains as well was definitely something that was good for some of these local banks and tried to offset some of the increase in provisioning, as opposed to the larger banks where it's really more on the loan book, the deployment of loans, which are they're really banking on.
Okay, let's move on to PNB, because this is a
Mhm.
stark contrast. Their net income in
Yeah.
2020 slumped by
Mhm.
73% to 2.62 billion pesos. That's on the back of provisions reaching 16.9 billion pesos, and they said five times more. So East West
Yeah.
is twice as much as last year. This one is five times more. Are they more exposed to the vulnerable industries? Of course, PNB is related, of course, to the airline sector as well.
Mhm. Yeah, I think that's why you've seen a significant increase in provisioning compared to the other top tier banks. You've seen BPI, BDO, and Metrobank. I think the provisioning was not five times. So I think that was the one that really affected the income of PNB last year. And I think a lot of their exposure is really on the airline industry. A lot of the vulnerable sectors, I think they have exposure. as well, real estate, airlines. So that's something that they are wary about. That's why I think the provisioning has increased significantly from the industry average.
Do you feel that this provisioning that has been done in 2020 is already preemptive enough to cushion them for the possible increase in bad loans that we might be seeing this year?
I think, given the aggressiveness of the provisioning of banks, I think they have already provisioned for continued challenges for their loan books for this year. I think that's already enough, given that there should be more optimism moving forward from where we are at the moment.
Okay, so financials actually up this morning by 0.6%. Now, Mike, let's move on to general recovery story here. We were already talking about the highly battered sectors, financials, and the airline industry here, but the rest of the world, at least in the U.S., they do seem to have, to be really, really staging a recovery here. The worst is over na daw, and there was even fears of taper tantrum happening there. How does that spill over to us? Is that not going to be happening for us anytime soon? And does that have anything to do with what you were mentioning, the fiscal discipline that's happening here?
Well, I think for the US, if there's taper tantrum, I think we're one of the fewer countries in Asia that will be most affected. So good thing the Fed reiterated last night that they don't think that it's time to increase rates until probably next
Mm.
year. So I think that's reassuring for investors, the bond investors. That's why we've seen their indices rally again last night, and the interest rates have started to go down. And looking at the Philippines, we've seen the recent increase in interest rates across the curve. In fact, the curve has shifted to at least by 100 basis points across. And
Mm-hmm.
I think this is really a combination of higher US Treasuries and the inflation scare here in the country. But we all know that the inflation is really more supply driven rather than demand side. So I think there should be some leveling off in the near term. For the domestic side, we think inflation will peak sometime mid this year. And then we can probably expect interest rate to start to taper off from their recent highs, from where we are at the moment. So I think overall, interest rates won't really be a detractor to the growth story. I think the main detractor is still mobility restrictions, for the Philippines.
Do you think the foreign funds are watching our interest rate story or spread vis-a-vis the high yields that we're seeing in the U.S.? And is that what's causing them to have this flight? They still haven't come back in the market. And should the BSP, with increasing inflation expectation, start to become more hawkish for us to be basically competitive with the yields in even developed countries rather?
Yeah, I think the main cause of the flight of foreign investors is really from the stock market is really they're looking at the Philippines to be a laggard play in
Okay.
the recovery story in Asia. I think for some of the fund managers that I've spoken to, the foreign fund managers, they'd rather look at other Asian markets that are recovering faster than the Philippines, and they'd probably go back to the Philippines once there's more confidence and there's more it's more definite in terms of how we can get the supply of the vaccine and how we can roll out the vaccine. So they're watching those closely. But in the meantime, if you can see the average daily turnover, I think foreign flows have gone down to just about 20% from the average before of
Mm.
about 40 to 50%. So it's really the locals that are playing in this market at the moment.
Okay, and keeping and pulling the weight for the foreigners that have left. Thank you so much for those insights. That was, of course, Mike Enriquez of Sunlife Financial.
Thank you, Danny.
Here are the other headlines we're keeping our eyes on. Trade Secretary Mon Lopez says MSMEs are already showing signs of recovery. Lopez said only about 4.6% of the country's MSMEs remain fully non-operational. At the peak of the pandemic last year, the percentage of MSMEs that fully halted operations reached 34%. Lopez said the agency started seeing an improvement in October when the number of non-operating small businesses went down by about 10%. This data was called from the DTI's latest impact assessment survey conducted from January 28 to Feb 10th with around 15,000 MSMEs as respondents. The CREATE bill is expected to provide around 1 trillion pesos worth of tax relief over the next decade. That is according to the presentation of Finance Secretary Sonny Dominguez at the Asian Development Symposium of the ADB. Dominguez believes that businesses will reinvest their tax savings from CREATE back into the economy to spur domestic economy and create more jobs. Congress has already passed the bill in February. However, President Duterte has yet to sign it. The priority measure will lapse into law on March 27th. The Toll Regulatory Board is currently validating San Miguel Corporation's claim that the Skyway Stage 3 project is now 97% complete. This is a necessary requirement before the company can start collecting toll fees. On top of at least 95% completion, the TRB said that the project must be in accordance with approved plans on safety and commercial operability. The board also needs to test the project's toll collection system and equipment to avoid glitches and flaws. Recall that SMC President Ramon Ang criticized the regulator's supposed inaction on the issuance of a toll operation permit. This as he claims that the operations of the new elevated expressway is costing the company at least 10 billion pesos a year. And that's a first look into the business day. Today is March 18, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.